Hello, my name is Marcus Walker. I wanted to come to you today and give you this presentation through Mortgage Coach. We're going to run through a couple different scenarios on different price points within homes for sale within the Washoe County area. There's going to be a few different scenarios here that we're going to go through and talk about. I want to bring more attention to purchase price and mortgage payment. So a lot of people think or want a home with a certain purchase price. However, until they actually look at the mortgage payment, you don't really know for sure if you can afford that house or even want to afford that house, especially in the rate environment that we're in today. So just for disclosure reasons, my name is Marcus Walker. I'm a mortgage lender with Crosscountry Mortgage. None of the rates or purchase prices here are guaranteed. These are just scenarios based on today's pricing. Today's January 19th, 2023. And just for disclosure, my NMLS number is 2005929. All right, so let's hop right in the first scenario here. The first scenario is going to be an address 70 Smith Ridge Drive, Park, Reno, Nevada 89502. We'll go to the presentation here. All right, gonna click that preview link. All right, guys, so here I am. This report was created for you by myself, Marcus Walker, Cross-Country Mortgage. Here's our address, NMLS number, and my website. We are an equal housing opportunity lender. So let's hop right in. So here is the summary for this specific property. So as you can see, we have our rent here. So I did create a rent versus own. This is a property essentially that, someone's likely being a first-time home buyer, they have their rent. So the first scenario is going to be the cross-country mortgage, Fannie Mae, home ready, 30-year fixed with no buy down. This is a conventional loan, 3% down. As you can see, we have our purchase price of $295, down payment $8,850, which is 3%. That gives us a loan amount of $286,150. Now, based on today's rate, we have a 7.625% with no points. That's going to put your total payment at $2,396. All right, and that's with a $295 purchase price. So I did put in another scenario with a 2-point buy down. So we got the same purchase price, same program, of course, the home ready 30-year fixed, same down payment, 3%. That's going to give us that same loan amount of $286,150. Now with the 2-point interest buy down, based on today's pricing, that's going to get you about a 5.875. So almost a 2% difference in terms of rate. So what's that look like in terms of our payment? So our payment's going to go from $2,396 to $2,064. So that's a $400.31 savings every single month for that borrower. So it's very important in today's market with how high the interest rates are that you're going up to bat for your clients as a buyer's agent and getting them as much seller concessions as possible to help save them money per month. All right. So our next scenario is an FHA 30-year fixed. I also included a 2-point buy down. So we have the same purchase price. Now the down payment's a little bit bigger with FHA. It's 3.5%. So it's going to be $10,325. Loan amount is going to be a little bit more because the loan amount does include a mortgage insurance premium that all FHA loans require. Based on that 2-point buy down, that's going to get you a rate based on today's pricing at 5.75%. And as you can see, the APRs are here. So we are disclosing the APR as well. So your total payment with this FHA loan with the 2-point buy down is $2,180. So not quite as much monthly savings as the Home Ready program. And of course, the difference between the Home Ready and the FHA, typically borrowers that have lower credit score are going to go FHA, higher credit score, they're going to go Home Ready. The difference in mortgage insurance per month is why the FHA loan is a little bit higher. FHA has a little bit higher monthly mortgage insurance. Okay, but still, even with a 2-point buy down, based on no buy down over here, you're still saving about $312 per month. Again, very important to, as a buyer's agent, to go up to bat for your clients and get them seller concessions to help buy down the rate, to give them that lowest monthly payment. All right, and so last but not least, go ahead and move this. Last but not least, we have our VA 30-year fixed. I wanted to show all the different options here, conventional, FHA, VA for this specific property. I did include a 2-point buy down as well. So what this is going to look like is a $295 purchase price. Down payment is $0. Good thing about VA loans, they don't require any down payment. It is going to give you a little bit higher of a loan amount from the purchase price because VA does have a guarantee fee that you have to pay up front that is financed into the loan. And so it looks like based on today's pricing with the 2-point interest buy down, it's going to get you the same rate as that FHA loan, about 5.75%. APR is going to be a little bit lower because the guarantee fee is a little bit less. And that's going to get you a payment of $2,049 per month. So as you can see, the difference in payment from the no buy down conventional to the VA 2-point buy down, it's going to save you about $455 per month doing a VA loan versus Home Ready. Now, of course, if you're not a veteran, the VA is not going to be a loan for you, but for our vets out there, this is an amazing option. 0 down, solid rates, get you that low payment. So I just wanted to show you in this scenario, based on this home of a $295,000 purchase price, what that monthly mortgage payment is going to look like. So, if you get a client and you're not sure about their income, just ask them, say, hey, how much do you make per month? If they tell you they only make about $4,000 per month, then this might not be the right home for them because typically you need to factor in any debts that they have as well into their debt to income ratio. And typically that needs to be anywhere from 50% or less of their income. So this payment of $2,000 with someone who makes $4,000 per month, that's already 50% of their income, not including any debts that they might have. So yeah, definitely, don't be afraid to ask people what their income is to help you gauge what purchase price point they should be in when you're showing them homes. All right, so I just wanted to bring this down here a little bit too. So the rent, an estimated rent for someone who's probably purchasing this home was probably around $1,800 per month. And let's go down here. So rent versus principal paid. So how much rent would you have paid at that $1,800 in 36 months? Total of $64,800. Okay. Versus if you're purchasing, this is how much principal you would have paid down. So in turn, your net worth when you're renting is 0. Net worth in 7 years with the Home Ready, conventional, FHA, and the VA, your net worth is going to be over $100,000 in 7 years. That's why it's so important to purchase and not rent if you're able to. All right, guys, so this is the first scenario. Property is 70 Smith Ridge Park, Reno, Nevada, at a $295 purchase price. So let's go ahead and exit out of this scenario, and we're going to go to the next scenario that I have for you. This one is 1654 Chatterley Lane, Sparks, Nevada 89434. All right, we'll go to the presentation. guys are enjoying this so far. Okay, we're gonna open that preview. Okay, again, this report was created for you by myself, Marcus Walker. Here's all my information. Okay, so now this summary, this specific property has an ask price of $399,900. I did kind of the same scenario. We have the Crosscountry Mortgage Fannie Mae Home Ready 30-year fixed, no buy down. This is a conventional loan. Same with the Home Ready here. The difference is no buy down and a 2-point buy down. So with the no buy down, you're still going to get the same purchase price for the down payment. The down payment is going to be 20% on this one. Loan amount is $319,920. Gives you a rate of 7.45% based on the no interest buy down. It's going to give you a monthly payment of $2,435. Again, this is 20% down, so a little bit higher down. But just to give you an idea of that payment, even with 20% down, still $2,435. All right, and then we have a 2-point buy down here, $399,900 purchase price, same down payment of 20%. Now with the 2-point buy down, it's going to give you a better rate, 5.75% based on today's market. Here are APRs as well. Now the difference in payment is pretty big. It's about a $400 difference. So as you can see, getting that 2-point buy down as a buyer's agent for your buyers is huge. It's going to save your borrower hundreds of dollars per month just by simply buying down that interest rate. All right, now we have the same purchase price here with the FHA loan, 30-year fixed, also with the 2-point buy down. Now the down payment's a lot less for FHA. It's only 3.5% down required. So that down payment is $13,996. Loan amount is $392,657. With that 2-point buy down, it's going to get you a 5.75% rate based on today's pricing and an APR of 7.043%. Now here's where we have a big difference in payment. So with that minimum down at 3.5%, with that FHA loan, you're gonna have a lot higher payment. So your payment just on the $399,900 purchase price, it's gonna put you at $2,773 per month. So you have a lot of people looking at homes in this price range within Washoe County. So they really need to know what that payment is gonna look like, because honestly, majority of people that are purchasing a $400,000 home don't expect that the payment is $2,700 per month. So it's really important to make sure that your borrowers are looking, or not your shoppers are looking in the right price point. It's going to save you time and a lot of headaches not having to go back and forth with your buyer. So I did also put in a VA 30-year fixed 2-point buy down, same purchase price. Down payment is $0, 0% down on the VA if you're a veteran. It's going to give you a loan amount of $409,097. We do have the guarantee fee in that VA, so that's why the loan amount is higher than the purchase price. We have no down payment plus the guarantee fee that's financed into the loan. Now the rate based on today's market, 5.75% with that 2-point buy down, 6.227% APR. You can see the payment here is actually less than the FHA, even with a higher loan amount and 0% down. Why is that? Well, VA does not have mortgage insurance. So that's one of the benefits of the VA loan, doesn't have mortgage insurance. But even still, a $400,000 house is going to cost you around $2,600 per month with the minimum down payment, even with a 2-point buy down. So again, very important to help your buyers as a buyer's agent to get them seller concessions in this rate environment that we are in today. All right. So again, this is based on $399,900 purchase price. Awesome. So that is going to do it for that one. Again, if you wanted to look at this home, the address is 1654 Chatterley Lane, Sparks, Nevada 89434. All right, so I'm gonna exit out of that, go back here. Okay, our next one is gonna be 1095 Spoonbill Court, Sparks, Nevada 89441. Let's go ahead and open this one up, see what we are looking at here. Hope you guys are enjoying this presentation so far. I love Mortgage Coach. It's a great way to help our buyers look at some different scenarios before actually making an offer on a home. Happy to run scenarios for them. Okay, I'm gonna go ahead and open this one up. All right, this report was created for you by myself, Marcus Walker. Here's all my information again. We are an equal housing opportunity lender. Okay, so we do have a higher purchase price here. As you can see by now, the purchase prices are going up because I want to give you an idea of what price point reflects a certain mortgage payment. Okay, so here we have a $499,000 purchase price. Now I did just do all FHA loans for this scenario. So in this case, our borrower has under 700 credit, so they're gonna go FHA. All right, now FHA requires a 3.5% down payment. So at a $499 purchase price, it's gonna be $17,465, putting your loan amount at $489,961. Okay. Now with a 1-point buy down, it's going to get you a rate based on today's pricing at 6.688%, APR at 7.885%. Now look at the payment here. Just at a $499,000 purchase price with the minimum 3.5% down payment, even with a 1-point buy down, they're looking at $3,724 per month. Now, I'm sure you get a lot of people shopping again within this price point, and they probably don't think that their payment is close to $4,000 per month. So it's super important that you vet your shopper leads and make sure that they're making enough money, at least double the mortgage payment. Okay. So let's go ahead and move over here to our 2-point buy down. Purchase price is the same, down payment's the same, loan amount's the same. Now with a 2-point buy down versus the 1-point buy down, it's going to give you a 5.75% based on today's market, 7.030% APR. It's going to drop your payment a good amount, about $383, which is awesome. So even just getting that little 2-point buy down in seller concessions to help buy down the interest rate, it's going to save your borrowers close to $400 per month, which is huge savings. So again, super important to get your buyers some seller credits in this market. So we're just going to go down the line with a 3-point buy down, same down payment, loan amount. Now the rate with the 3-point buy down based on today's market, 5.375%. 6.749% APR. It's going to save them additional a little over $100 per month based on the 2-point for the 3-point buy down. Okay, but still, even with a 3-point buy down within this price point of $499,000, they're still within that $3,000, per month plus payment. So, and then of course we have our 4-point buy down, same purchase price, down payment, loan amount. Going to get you a 4.99% based on today's market, 6.454% APR. It's going to put you at $3,193 per month. So I just wanted to ask you, did you think that these mortgage payments were going to correspond with this purchase price? Now, whether that's yes or no, obviously that's probably based on experience, but it's a little bit shocking because you would think for an average home at $500,000 in our market, you wouldn't think it's going to cost you over $3,000 per month in a mortgage payment. Again, we are in a higher rate environment, so that's why I'm doing this presentation, to give you a better idea of what that mortgage payment is going to look like based on the purchase price. Okay, so this is again our home. Let me get that address. So address is 1095 Spoonbill Court, Sparks, Nevada 89441. Purchase price $499,000. All right, so let's move on to our next scenario. All right, this one is going to be a USDA scenario. Let's go ahead and open up our presentation. Bear with me here, I appreciate it. Alrighty. Okay. So here's a scenario for you using a USDA loan or a Rural Development 502 guaranteed loan. So in this scenario, we have a $430,000 purchase price. First scenario is going to be a 1-point buy down. Down payment with the USDA is 0% down required. Loan amount is going to be a little bit more expensive because there is a 1% guarantee fee that's financed into the loan. So based on that 1-point rate buy down, it's going to give you a rate based on today's market at 6.563%, APR 7.185. So even at this $430,000 purchase price, which is fairly low, our median sales price for last month was actually in the $500,000 range. So even at this $400,000 purchase price, they're still going to have a payment of $3,042 per month. Okay. With a 2-point buy down over here, same purchase price, 0% down, same loan amount. Based on today's market, it's going to get you a little bit better rate of 5.625%, a 6.328% APR. So it's going to lower your payment to $2,779 per month, which is about a $339 savings, which is huge from just 1-point to 2-point seller concession. So I really strongly urge you in this high rate environment that you can hopefully get your home buyers at least a 2% concession. Okay, a 1%, still good, better than none, but really anything 2% concession or higher is really going to help your borrower save the most money. Okay, and then I of course did a 3-point buy down as well. So we have the same purchase price, down payment, loan amount. Based on today's market, it's going to get you a 5.125 based on a 3-point buy down, 5.914% APR. So it's going to save you an additional $135 per month, putting your total savings from the 1-point buy down to the 3-point buy down about $520 monthly savings. So that's huge for someone. $500, that's big. So it really helps your borrowers to get them the most seller concessions possible in this higher rate environment. So again, I wanted to ask you, based on the $430,000 purchase price, did you think or calculate that the payment is going to be over $2,600 per month, potentially even $3,000 per month for a $430,000 home? Honestly, it can be shocking to some, but that's just what it is based on today's market. So again, we do have our rent versus principal paid in 3 years if you did purchase this home. I just plugged in a rent of $2,000 for someone purchasing a $430,000 home. They're probably coming from a rental that's around $2,000 per month. So just in 3 years, if you're paying $2,000 per month, you're going to pay $72,000 in rent. Versus if you purchased, you would have paid down around $20,000 in equity, and that would build your net worth in 7 years. So you can see the equity in 7 years net worth. So it's really important, to help educate people out there who are renting, to build wealth through real estate. It's a great way to build wealth through real estate. Okay, so we'll go ahead and go on to our last presentation here. This one's going to have the highest purchase price. Address is 5089 Du Bonnet Drive in Sparks, Nevada 89436. Let's go ahead and open up our presentation here. Bear with me again, I appreciate it. All right, we're gonna go ahead and open up that preview. Hope you guys are enjoying this so far. Happy to present to you guys. So again, we have our property address here, 5089 Dubonnet Drive. I'm not sure why some of them are popping up and some of them aren't. Little glitch there I might have to figure out. Again, we are an equal housing opportunity lender. This report was created for you by myself, Marcus Walker. There's all my info. All right, so let's hop right into this last one here. So this one here, I just did 3 different scenarios with your typical Fannie Mae conventional financing. The 3 different scenarios, the first one's going to be a no buy down, second one's a 2-point buy down, and a 3-point buy down. Just in case you guys aren't aware, 1 point is equal to 1% of the loan amount. So say you get in contract and the seller's willing to give you a 2% concession. You're going to typically use that full 2% towards the rate buy down, and you might have a little bit left over because the seller concession is based on the purchase price and the buy down is based on the loan amount. So typically, like, you'll have a little bit of money left over to help with closing costs after the rate buy down. So we'll start out with the $675 purchase price on the no buy down. Loan amount $607,500. So for this scenario, I have a 10% down. Typically, people in this price point, they likely have some money in the bank, so they're going to put some money down. In this case, we're putting 10% down, so it's going to give you that loan amount. No buy down on this one. It's going to give you a rate based on today's pricing at 7.625% and APR 7.917. Now it's going to give you a pretty big payment here, $4,891. Okay, at a $675 purchase price, even with 10% down, you're still going to be hitting close to $5,000 per month. So if you're showing borrowers, or if you're showing home buyers houses in this price point, you better make sure they're making at least 10 grand a month, because that's, about half of their monthly income, which is still super tight. Typically, you want to see them making even more than that. So we'll go to the 2-point buy down here, same purchase price, same down payment. Based on today's pricing, that 2-point buy down is going to get you a 5.95% and APR of 6.393%. So it's going to drop your payment significantly, about $677 per month savings, just getting that 2-point buy down. So that's going to put their monthly payment at $4,214. So again, super important to get your buyer concessions in this market. I can't stress that enough. Okay, it's going to save them hundreds of dollars every month, and most sellers are willing to give the concession because they're having a harder time selling their homes right now in today's market. So we'll move on to the third scenario. 3-point buy down, $675,000 purchase price, same 10% down payment. That's going to put your loan amount at $607,500. Now with the 3-point buy down based on today's market, that's a 5.575% rate, 6.101% APR. It's going to save them $821 per month from no buy down to 3-point buy down, which is huge, right? $821 per month. That's a lot of money just to get them a 3-point buy down, 3% seller concession, I mean. So again, I just want to ask you, based on this $675,000 purchase price with 10% down, you got to make sure that your home buyers are making pretty significant money, because their payment is going to be in the $5,000 to $4,000 range. So let's go here. Monthly payment difference, we did go over that. Savings over 60 months. So this is interesting. So from a zero buy down, obviously they're not going to save anything because we're basing it off that. Now with the 2-point buy down over the next 60 months, they're going to save $51,000 just off their monthly mortgage payment every month. And here with the 3-point buy down, they're going to save about $63,000 over the next 60 months by having that lower rate. So it is pretty significant savings. And here you can see the net worth over the next 15 years. This is based on a 3% appreciation rate. So I hope you guys enjoyed this presentation, and I really hope that this helped you kind of put together purchase price and what the mortgage payment is gonna, estimate at looking like. If you aren't sure on how to calculate a mortgage payment, that's totally okay. It's not the easiest thing in the world, but if you do go to my website here at applywithmw.com, I do have a mortgage calculator on here. So you just scroll down, keep scrolling, payment calculator. Okay. So here you can kind of play around with the purchase price, down payment, property tax, HOA, home insurance, amount of years, interest rate. So you can really plug in any scenario here, and it's going to give you the monthly mortgage payment. And you can actually look at the payoff schedule, the amortization schedule. So yeah, if you're out there and you're not really sure whether the lead that you got can afford the home that they're wanting to look at, just ask them, hey, what's your monthly income? Okay, great. Plug in the home that you're going to look at, plug in the purchase price, down payment, go through it with them, ask them, don't be afraid, and you can really figure out if they're going to be able to afford that home or not, by just giving them a simple calculation of what that mortgage payment is going to look like. They're going to love you because you're saving them time and you're being a valuable resource and giving them information. Okay, well, I hope you guys enjoyed the presentation, and thank you so much for watching it. And please, if you are looking to purchase a home or just want some more information, feel free to give me a call. You have my number, email, it's all right here, my website, all that good stuff. All right, guys, thank you so much and have a great rest of your day.